You have definitely a yield compression, yeah, for the investors. The margins for the banks are continuing to shrink. The competition is extreme, yeah, and since we are here in Frankfurt in Germany today, particularly in Germany, yeah, if you look at the spreads overall, Europe, they are extremely low in Germany. This could, of course, be based also on our banking system. You have the cooperative banks, you have the savings banks. There's a lot of money to be invested also by the banks. Risks are distributed widely in these banking systems in Germany. That's probably a reason why the spreads on financings are more and more contracting, and banks, particularly in Germany, are continuing on this trend. The LTVs, yes, have risen, but not as much and as fast as I was worried about 1 or 2 years ago. I think banks have not forgotten the last cycle. But I always, raise my finger when people talk about the still reasonable LTVs. You have to look at the valuations, yeah, and valuations are going up and up and up. You have to look at the definitions, the variables in these calculations. There's a lot of future growth built in. Rent increases over the next few years, and this is where, if we have then again the next cycle, this is where it's going to come from. So I always say, okay, take the development of LTVs always with a grain of salt. Banks are putting more and more volumes out there in the market. Mezz financing gets more and more squeezed at the end. You almost don't need it anymore. I would say there's, on the equity side, also a lot of money. So in many instances, you don't even need a mezz financing anymore compared to a few years ago. You have a lot of alternative financing sources. You have more and more insurance companies, pension trusts coming with billions of euros and dollars into the market. Yeah, competing also with banks on large projects. Yeah, there's a lot of stuff done between developers and institutional investors directly. And also a theme which I'm witnessing, if you talk to people in the industry, there is the interest to build up more and more debt funds in competition to the banks, yeah, because the equity investment side is not sufficient, so people are looking for new opportunities, yeah. But also there, overall, everywhere the yields are shrinking. It's difficult to make a lot of money. It will be for banks. It will be increasingly difficult also next year. Regulatory pressures, are keeping up. Yeah. So this, I would summarize the market right now.